Hello everyone, good afternoon. Hello everyone, good afternoon. So could I get a mic check real quick before we get going? Make sure my settings are good. All right, loud and clear. Awesome. All right, so we're ready to go. Let's go ahead and get into it. Mr. Solomon, welcome, Dylan. We're ready for a session. Hope you had a good weekend. I appreciate that. Hopefully you're having a good weekend as well. Looking forward to getting into it. 39 session already. Appreciate that, May. Yep. Been doing this for a little while now. Denisha, hope everyone had an amazing weekend. Thanks for joining us. Ellen, hello. Papa Vlad, my man. Hope you're doing good. Doobie, all good. Awesome. Screen is good too. Awesome. So let's go ahead and get into it. So as I was saying, hope everyone had a great weekend. We got CPI coming up this week. So briefly, let's go ahead and touch on the economic calendar. So we do have no high impact news drivers for USD Monday through Wednesday. And then we have CPI and PPI on Friday. So CPI Thursday, PPI Friday. So I'm expecting most of the animation to come in latter portion of the week. As I already covered my August protocol for you guys, probably not going to be looking to do much Monday through Wednesday, maybe some intraday scalps here and there, but not too terribly interested in that price action using the economic calendar. However, Thursday and Friday definitely will be in front of the charts looking for some opportunities. So that's how I'm going to be playing this week. And with that, let's go ahead and get into the analysis. Roshan, love from India, bro. Appreciate that. Earl Garrison, hello. What's going on, my man? Hope you're doing good. Hope Florida's treating you well. And let's go ahead and get into it. So looking at dollar index on a weekly chart. So looking at last week's for context for this coming week. So I did call expansion higher, meaning from where we opened, did we move higher or lower from where we opened? And then clearly we had a expansion higher. We did get a bit of retracement on Friday non-farm payroll. So I will be monitoring a few things going into the week, and then I'll cover that on a daily chart. However, what I'm seeing right here is bullish order flow, given that we did close above this consequent encroachment of this weekly fair value gap. What I did not like to see is how we are rejecting these two up close candles. I would have preferred to see us close up in the bodies, as that would be good confirmation to continue accelerating higher. So with that, weekly chart is pretty much 50-50 to me. Reason being is because I could see this being an intermediate term low. Shorts have been trapped. So if we are going to go higher and market makers are going to reprice it there, I do not see why we should come below these lows. However, if we do begin to accelerate lower, and then what I'll cover on a daily chart will be what'll qualify or invalidate my bias, and then we'll go ahead and look at that from there. But from my standpoint right now, I am bullish, and I will be treating it as such unless that order flow is invalidated on a daily chart specifically. So let's go ahead and roll down into our daily chart. Perfect. So we are seeing bullish order flow. So for those of you guys that were with us here last week, you guys remember me calling us higher from this fair value gap, and then nice potential profitability from this fair value gap into these premium levels. So our first target on the previous week was this fair value gap here. Second target was this one, and then we did not get that third target being the buy side liquidity. However, Monday, Tuesday, Wednesday, all expanding higher. And for you guys that know the non-farm payroll protocol, I'm not looking to do anything after Wednesday for the most part, unless I see some opportunity after the non-farm payroll release. So overall, nice delivery, smacking the consequent encroachment nicely, and then we've retraced after the expansion higher. So what I'll be looking at going into this week, my attention goes to this fair value gap in here. I like how we closed inside of it, and I would prefer to not see us close below it. But the last line in the sand for bullishness for me is a daily closure below this dotted line here, which is consequent encroachment of the weekly fair value gap. So as long as we stay above consequent encroachment, or 50% of this purple rectangle, I am bullish. Closure below that sends us into the daily bullish order block in here, and then how we trade in that order block will be influential. Do we find support and go higher? Or if we get a closure below that order block, then I suspect we come clean out these equal lows here and trade into that inversion. So a bit 50-50 for me. So you guys have what's going to qualify or invalidate my bias. So if we do find support inside this fair value gap and don't get below consequent encroachment, my first upside target will be previous week's high. Through that, I like the opening price of this up close candle in here as a second target. And then we'll see these relative equal highs likely delivered, assuming we find support here. If we get below this consequent encroachment on a closing basis, then I told you guys I take my attention to the bullish order block, and then the fair value gap down here, acceleration through that, I said takes us into the equal lows and the fair value gap. So let's drop down into our 4-hour chart. So last week, beautiful delivery. We touched on this 4-hour breaker. Here, I indicated to you guys how I would prefer to see a portion of this fair value gap left open. We trade it down into a 1-hour breaker here, which is this candle, and then we expanded higher, not needing to fill this in. So you guys saw me qualify a breakaway fair value gap live. I covered why I was expecting that to be a breakaway fair value gap. So that's a frequent question I get. Well, how do you classify breakaway, measuring gaps, all that? You should be here taking notes, looking at what I'm calling, because the analysis I'm giving behind that is why we're seeing price deliver the way it is. So seeing support from that breaker, leaving this fair value gap closed, no surprise. And then getting that expansion higher into the fair value gap is target 1, and then this fair value gap is target 2, and then non-farm payroll ripping against that. But since we're finished Wednesday, no issue for us in there anyway. So on a 4-hour chart, nothing much here of interest. Let's drop down to our 1-hour. So what I did see was interesting is, I know this is a busy chart, but there's quite a few arrays that I'm trying to encapsulate in this price action. So what I'm measuring here is premium to discount. Extend this here. So this thick black line here is 50%. So we traded down into discount valuation and we cleaned out the sell side, which is not problematic. How we trade here will be influential. If we are bullish, I do want to see discount valuation traded out of with speed. I do not like seeing us hang around discount valuation if we are to be bullish. So I would prefer to see acceleration on the upside to our premium objectives. However, if we trade up inside these premium arrays on an hourly chart, being this fair value gap here or this one, and we begin seeing weakness, then that does not bode well for a bullish dollar. So on the hourly chart, failure to displace and close above these fair value gaps likely sends us into these relative equal lows. And then this line here is that daily bullish order block I highlighted to you guys. That would be a downside objective, assuming we reject these fair value gaps in here. So that's what I'm looking at on the hourly chart. Let's go ahead and transition over into euro dollar. We'll go into bonds first just to keep it consistent here. So beautiful delivery on bonds last week. Called it lower into the weekly bullish order block. Nice expansion into that level, and then retrading on Friday, which is reasonable to expect after a large move, one-sided week. So seeing that we took out these equal lows here and here as we were expecting before this weekly candle even opened, we then repriced into this candle's opening, which is that bullish order block, and then we saw a bit of a retracement off that. So overall, beautiful delivery. So I was getting a few questions regarding how was I able to qualify a bullish dollar when the weekly chart is still looking bearish. It's because I'm using intermarket analysis. So I'm able to see things that most analysts, most traders is flying right over their heads. So that's the advantage of me providing these sessions for you guys, is you're able to see into my mind and what it is I'm seeing and how I'm able to forecast these price movements. And you guys are getting the secret sauce here, free 99. So on this weekly chart, we have this bearish order block, last two up close candles. So if we are to continue accelerating lower for these equal lows in here, I would like to see us stay below this opening price here. And I would like for that to send us lower into the sell side here. Trading up through that takes us into this fair value gap and here on the upside. And then how we trade there will be influential moving forward. But just looking back briefly, looking at a bit of a more macro perspective here, I took our attention to this breaker, which is high, higher, high, lowest down close candle within this price range, extending that through, rejecting there, fair value gap, trading up into it, rejecting. And then I took our attention to this gray rectangle, this gray shaded region, which is a fair value gap, or a BISI more specifically. And then I took our attention to how all the bodies were being respected in here. So this was all bearish to me. When we saw this displacement, I just saw this retracement into this up close candle as new selling opportunity for smart money to recapitalize that liquidity to then send us lower into the discount objectives. So that's why I was favoring lower prices throughout all this time. So with that, let's drop down into our daily chart. Perfect. So like I was saying, the two downside objectives last week were these equal lows here and here. So what was interesting is how Monday's trading right here, before this candle even started trading, I took our attention to this fair value gap. And I told you guys before the fact it would be inversion. So what does that mean? I know the draw on liquidity. So I get a lot of questions regarding, well, how do you know something's going to be inversion? How do you know whether to trust an order block or a fair value gap? None of these concepts will work unless you clearly understand draw on liquidity. You must understand where that market is drawing to, then all these concepts work. But if you don't have that skill set to predict the draw on liquidity, you're going to struggle trying to look for entry patterns. So I'm able to qualify breakaway gaps, inversion, order blocks, all these things real time because I understand where the market's drawing to. So I'm understanding how the algorithm is going to refer to specific PD arrays to reprice us from one price point to another. So as I was saying here, traded into that inversion, beautifully rejecting it. So why would this be institutional order flow entry drill? Because we're trading into a balanced price range. So because these two fair value gaps overlap, I don't need to see us reprice all the way to the high end of this inefficiency. And I would prefer to see most of it left open. Was that breakaway gap? And then beautiful acceleration lower Tuesday, Wednesday, into Thursday, smashing all of our objectives, taking out the equal lows, repricing this orange box, which is that BISI, the remaining portion left open. And then also we had that weekly bullish order block. We had our attention there. So with the context from previous week, let's go ahead and look forward. So what I will be wanting to monitor is how we trade inside this fair value gap in here. So if we are to remain bearish, I prefer to see us stay below this and trade down into previous week's low and into these relative equal lows and see some acceleration on the downside. Failure to find resistance in this fair value gap, my attention goes to the volume imbalance here and this bearish order block, the last two up close candles. And then that would be the last line in the sand for bearishness for me. So if dollar is going to continue higher, I'm qualifying it based off what I'm seeing in the bond market. So I would want to see the bond market reject these premium arrays to send us lower into the sell side, and that would definitely put some lift on dollar index. So with that, let's go into the yields. So nice retracement lower off the highs this week, but as we discussed, all of our targets were smashed beautifully. So this is the yields is just the inverse of the T-bonds themselves. So seeing how we traded into this balanced price range, which I took our attention to last week, beautifully calling the low of the week, and then expansion higher, repricing this inefficiency, and taking us into the buy side almost to the point. And then we got a bit of a retracement. So if we are to continue bullish on yields, I prefer to see us find support inside this purple fair value gap here below market price, and then see us expand higher, take out the equal highs, and continue expanding higher. So I am seeing higher interest rates moving forward, which will obviously put lift on dollar index. So down to the 10-year yield briefly. Same thing, order flows bullish. We took our attention, we were down here to the bullish order block, then propulsion block, then the fair value gap, sending us higher. So we traded above these relative equal highs, and now we have equal highs here and here. So this purple rectangle I have on my chart is a bullish breaker. The reason it's a breaker is because we have a low, lower low, and a fair value gap. So what I'm going to be monitoring here is these are our three critical PD arrays. We have a fair value gap, the breaker, and we have these down close candles. So I would want to see price supported here, and the last line in the sand for bullishness for me would be these two down close candles. If we get a closure below 50% of this, the biggest, beefiest down close candle here, then I will expect lower prices. However, I'm still going to trade the underlying order flow we're seeing, which is bullishness. So I will expect a reaction here to send us higher. So in summary, we are going to be seeing risk off likely, which is higher dollar, lower foreign currency, and lower stock indices. So with that, let's go ahead and segue into euro. Let's go up to a weekly chart. So we were seeing here last week how we rejected this volume imbalance, traded up to the high, repriced that efficiency beautifully, and then rejected lower. So what I did like for bearishness was how we did it trade through this entire fair value gap in here. And then we had this weekly fair value gap here in purple to contend with. So I was saying I would have preferred to see us get below it, use it as resistance. The market wasn't having any of that. And then we retraced higher. But looking at this weekly candle, did we expand more lower off the open or higher from the open? Clearly lower. So the bearish bias was the correct move last week into these discount arrays. So looking at euro simply on a weekly chart, this is 50-50 to me. So I would have liked to see an acceleration. We didn't get it. And now it looks like we're finding support inside this down close candle. But we also have this balanced price range here. So one thing that you guys know that have been with me for a little while here is once we have longer term objectives hit, I tend to want to just take a step back and just allow the market to show me the obvious move that's coming. So given that we have had this longer term objective repriced into, we're in between this fair value gap here and this balanced price range. So I don't have a clear read on the weekly order flow. So that requires me to go into lower time frame, daily, hourly chart and refine this even further. So as I'm saying right now, on a weekly chart, it's not clear to me. What I will be looking for is how we trade inside these key levels. So if we do reprice higher into the balanced price range, I would want to see how we trade there, and how we trade there at the time will be useful to me. So I would want to see how we react in this premium array. If we accelerate lower and trade back down into this fair value gap and down close candle, I'll want to see how we trade inside of these discount arrays. And then if we accelerate through it and dollar continues higher, then we will have that same risk off bias and we will just continue looking for discount arrays. So dropping down into our daily chart. So we had this daily balanced price range, traded into it last week and rejected. So we opened last week here. So when I was doing last week's analysis, all we had was this candle to look at. So I was indicating to you all that if we were to be bearish, I would want to see price sent lower from this bearish order block. We traded up into it, Judas swing on Wednesday, hitting that candle and then rejecting lower. So the bearish bias paid Monday, Tuesday into Wednesday, repricing into the discount objective I took our attention to, which was this fair value gap in here. And then we handsomely repriced into that, while also repricing into the daily bullish order block, which is the 2 down close candles. Looking at this, extending it through, we repriced down into this level beautifully, and then we failed to accelerate lower. So plenty of potential profit from the high of the week to the low where we were looking for it to be traded, and then typical non-farm payroll shenanigans with Thursday being consolidation, and then Friday going against the existing order flow. So going into this week, because we're 50-50, even on a daily chart, yes, order flow is bearish, but we did just trade into a higher time frame discount bullish order block. So what I will be monitoring is how we trade going Sunday into Monday. So this purple rectangle is that weekly balanced price range. I do want to see how we trade inside this key level and inside this bearish order block, So we can reclaim this order block, meaning we trade into it again and accelerate lower. And that's what I'll be monitoring going into this week. So looking at euro dollar on the upside, we have this down close candle here. So I'll look at the opening price and this candle's high. And if that does lend support and we accelerate through this bearish order block, then I will look for these relative equal highs and then the buy side liquidity there. So playing it by ear, showing you guys what I'm looking at, what will qualify or invalidate my bias. So for right now, no swing trades that I can see that are just obvious one-sided slam dunks. So I'm not really interested in higher time frame trading right now. And I will predominantly intraday scalp and look for intraday opportunities, just trading session highs, session lows, previous days highs and lows based off what I'm seeing here in the foreign exchange market. So with that, let's go ahead and go into the index futures. And we'll get started on the SPOOs. All right. So looking at S&P on a weekly, beautiful repricing to the premium objectives we were looking for, which initially was this volume imbalance here, and then this one. So this dotted line here is the weekly volume imbalance consequent encroachment, or 50%. So seeing how we traded up into it last week's trading and rejected lower. So this is not a bullish signature to me. Coupling that with dollar accelerating on the upside, it gave me confidence to short sell S&P and also share this analysis with you all in the Telegram. So the analysis I'm basing indices off of is also using intermarket analysis. So that's how I'm able to forecast these things ahead of them manifesting into your own charts. So another thing I want to take our attention to is, okay, we first saw how we rejected consequent encroachment of the weekly volume imbalance, and then looking at this wick, go ahead and make that normal. So we have the 50% or consequent encroachment of this wick. So I use wicks to validate order flow. So if we were to continue bullish, as you guys know, I don't like to call tops. I wait for the market to obviously want to show me we've created a high in the market. So seeing how we're rejecting the consequent encroachment of the volume imbalance and also seeing consequent encroachment of this wick rejected indicated bearish order flow to me. So when price is trading around here Monday into Tuesday, I'm already expecting lower prices because we're seeing these weakness signatures in S&P. And then I'll validate some other things of how I used NASDAQ, SMT to further confirm this. But we are seeing bearish weakness signatures here by not even being able to trade above 50% or consequent encroachment, indicating weakness. So that's why I took our attention to discount arrays. And that's why you guys were all on the right side of price action in the previous week, because of these signatures that I'm reading into price action. So we had a nice expansion lower, repricing this entire inefficiency and trading to this weekly bullish order block to the tick. So looking at the high here, the high on that candle comes in at 44.94, and then the low of this candle, which is right here, comes in at 44.93.75, which is only a quarter of a point below it, filling that spread for smart money that's looking at these key levels as well. So as I'm saying, weakness signatures all across the board, and now we've repriced down to a weekly bullish order block. Well, technically a propulsion block because it's a order block nested within another order block. So this will take the place of institutional support. So I do like to see that we aggressively expanded lower, but now what I will be monitoring moving into Sunday, into Monday's trading, is how we trade inside this key level. And we also have this weekly fair value gap in here that, given that we closed below consequent encroachment, I'm going to want to monitor in the lower time frames and see how we trade. So if we begin using this level as resistance and we start accelerating through this down close candle, that would bode well for bearishness in S&P. Closure above this fair value gap and using it as support, sending us higher, would obviously be bullish, and then I'll get in line simply with what order flow is showing. So I'll be monitoring dollar and interest rates as well to also weigh out whether we're going to see risk on or risk off in S&P this week. But overall, just a beautiful repricing lower. And as we discussed, no surprise to any one of us, as we were all over it. So dropping down into our daily chart. Go ahead and refine this further. So that same level here is our weekly bullish order block. So let's go ahead and look at last week's price action. So the SMT with NASDAQ, let's go ahead and take a look at that and how I use that to further qualify what I was looking for. So the NASDAQ was not the final confirmation that we were going lower. It was simply a confirmation in addition to all the other concepts and tools that I'm sharing with you all. So understanding the weekly chart, the order flow that we saw around those key levels, seeing how dollar index was accelerating higher, and then the NASDAQ is just the final algorithmic confirmation I needed to confirm that. So seeing here how S&P and Dow were continuously making higher highs, NASDAQ wasn't having anything to do with it. And more specifically, rejected inside of this balanced price range in here, where the two fair value gaps overlap. And then we saw that rejection lower into the discount levels. So using the SMT to further validate that gave me that confirmation. And then seeing how on Wednesday, we displaced through this low. So now on a daily chart, we got displacement. So we were in consolidation profile. And then all I simply want to see on a daily chart for a clear daily bias is displacement. So we got that displacement on Wednesday, creating that shift in market structure. So simply 2022 model. Closing below it, Thursday, choppy price action. And then looking at this here on Friday, for those of you guys that are in the Telegram group, and if you're not, you're definitely missing out. I shared with you guys that I was interested in seeing price trade up into the fair value gap, more specifically the bearish order block. And then I wanted to see it reject and send us lower. And then I'm pretty sure that's the same thing that printed in everyone else's charts as well. So beautiful delivery overall. We're now seeing bearish order flow. But as I said, we've traded down into this bullish order block, which are these 3 consecutive down close candles now on a daily chart. So what I want to see moving forward and what I'll be measuring, clearly order flows bearish. We traded into an order block, into the fair value gap, and we rejected. So we have traded down into a short-term premium. So do we find support in this fair value gap and order block to send us higher, or do we accelerate down through it? That's what I'll be monitoring going into this week. So to refine this even further, to not leave you guys off with 50-50, this market is exceedingly weak based off what I'm seeing. Volume imbalance, not even able to come up into it. That's another form of a breakaway gap. Things I use to measure order flow. Longer term students, people that I train privately, you guys understand that as well. And then further seeing how we're unable to even trade above consequent encroachment is a weakness signature. So this market is exceedingly weak to me, and I'll be just looking to confirm that in the lower time frames and inside of these discount arrays. So another thing I want to take our attention to is this daily inversion fair value gap. So if we are to remain bearish, I prefer to not even see us revisit this fair value gap. We can trade up into this inversion, use it as resistance, bump it, and send us lower. However, that's not even necessary. But if we do get above this daily inversion fair value gap, we are not as bearish as I thought we were. And then I'll just reassess and wait for more information. And then as you guys know, my participation is likely going to be limited Monday into Wednesday, simply because there's no news. I'm looking to trade dynamic, quick price action and up and down, small, 5-handle, 3-handle moves in consolidation. I'm not terribly interested in. So I'm going to come in when the markets are more animated, which will be Thursday into Friday. So as I'm saying, I would like to see us stay below this inversion fair value gap and accelerate through this discount fair value gap in here. Through that fair value gap on the downside takes us into this fair value gap in here. Acceleration through that takes us into the sell side. So on the downside, that's what I'm favoring, but I would also like to see lift in dollar to further confirm this. So with that, I believe that's all on a daily chart. Let's go ahead and drop down into the 4-hour. So a handsome delivery previous week with what I shared going into Mondays to Sunday to Mondays trading. So I shared with you all how this was a market structure break. So a market structure break is much more significant than a market structure shift. And as you guys know, I'm qualifying all these things real time. So before it prints in the charts, I'm already telling you guys where it's going. So I told you guys that the last line in the sand for me to be bearish was this balanced price range. So looking at where these two fair value gaps overlap, extending that through, and also looking at that 4-hour bearish order block. So we traded up into that going Sunday into Monday. So this was the accumulation portion of the week, slight manipulation, and then distribution into the latter portion of the week. So I did like how this is now an intermediate term high, and this is a significant high in the marketplace to me. So seeing how the bodies are beautifully respecting that opening price, which is that bearish order block, and sending us lower. Gap lower, repricing up into it, not even able to fill it all, indicating the market is exceedingly weak, and then acceleration on the downside. So going into non-farm payrolls trading, it was a pretty easy slam dunk for me to tell you guys that we were going higher into the buy side to go lower. So why was that easy for me to see? Simply because I understand the daily order flow. So I'm able to qualify things in lower time frames with much more ease, because understanding that the lower time frames stems from a higher time frame directional premise. And if your lower time frame trading is not stemming from a higher time frame directional premise, you're likely going to struggle. So let's drop down into a hourly chart now. So this line, let me go and send that through. That's that daily bearish order block. So beautifully repricing into a short-term premium from this high to this low. Short-term premium, daily bearish order block, institutional selling, smash and price lower into the relative equal lows, and the daily fair value gap that we were looking at from the previous day. So overall, textbook delivery. So now with that context behind us, how am I going to use that into the coming week? So as I said, we're seeing order flows exceedingly bearish. We're seeing that the swing high here at the top is taken out anemically, rejected. Buy side liquidity here traded above, rejected. So order flow, institutional order flow more specifically, is bearish. So I'll be expecting that to continue unless we get above this high. So I want this to see an intermediate, or to see it being priced in as an intermediate term high. So for a lot of market structure traders out there, market structure traders struggle if they don't have a higher time frame premise. The reason being is because context is key for market structure. And what do I mean by context? You got to know where the market's reaching. You got to understand higher time frame directional premise. And that's how I'm able to qualify these key lows, how I'm able to qualify market structure breaks, intermediate term highs here or here. I'm qualifying it based off higher time frame premise, which then allows me to trust market structure. But market structure is not a holy grail unless you understand order flow, drawn liquidity, and obviously time of day. So as I'm saying, intermediate term high, I would like to see this high stay intact if we are to remain bearish. So going into this week, we have an elongated SIBI, which is a sell side imbalance, buy side inefficiency. How we trade into that will be influential. So this purple line, let me extend that over. So that's that daily inversion fair value gap, which also perfectly coincides with this breaker. So we have a high, higher high, and we have a bearish breaker on the hourly. So we have this, as I said, elongated inefficiency. We do not need to trade up to this one. So I would prefer to see this left open as a breakaway fair value gap. So I would like to see the market do something like a manipulation into the short-term premium from this high to low, into the breaker and fair value gap to then accelerate lower. That's what I'd ideally like to see. However, Sunday's open is not predictable by anyone. So we could have some crazy gap higher or lower going into Sunday, which could invalidate all of this. So barring any crazy open higher or lower, that's what I'll be looking for going into this week and monitoring order flow around these key levels. So as I said, downside objectives would be the rest of this fair value gap here, this daily fair value gap in purple, and then the sell side liquidity below here. So that's what I'll be looking for going into this week. And on a 4-hour, we could also be seeing a potential market maker sell model here. So looking at this as original consolidation, smart money reversal. How did I qualify the smart money reversal? Because we saw SMT with NASDAQ. So that's how I was able to call us lower from here. So that's our low risk sell of the week. We have distribution back into here, redistribution, and then I'll look for a second stage distribution to send us down into these relative equal lows and sell side liquidity. So that's what I'll be favoring going into this week based off what I'm seeing now. But as you guys know, I will have to see how we open on Sunday moving forward. So with that, let me go ahead and touch on one thing in Euro. So I did qualify this breaker. So we were looking for price to drop. So dropping into the lower time frames on Euro real quick. Trading into that breaker, leaving this fair value gap open. So the same thing I just covered on S&P or SPOOs is how I wanted to see that higher fair value gap left open. And it's the same concept here. Balanced price range, we've left it. So there's no need for price to come up into this fair value gap. And I prefer to not see it do so. And then I told you guys we would drop from a very specific level, which is the breaker. Trade up into it into Monday, nice expansion lower into Wednesday. And then our week is completed there, assuming you're following the non-farm payroll protocol. So with that, I'm going to go ahead and get into a few questions now, if there are any. Also take a look at a couple other markets, some interesting things in crude oil, maybe do a deep dive in institutional order flow, share some things you might not have seen before. Before I get into that though, I want to extend a huge shout out to all the people that are members in the chat. So we do have quite a few members that have signed up for us here, and your questions will be prioritized. So I will try to get to everyone's questions, but as the volume of questions start coming in more heavily, I will have to start prioritizing people's questions. And then for those of you guys that do want to sign up, you're indicating that you do want your questions answered, and I'll be more than happy to attend to them. So with that, going to go ahead and get into a crude oil analysis, break down order flow. For those of you guys that are just here for the typical analysis I do, you guys are free to go. I'm wrapping that up here, and then I'll get into a few questions, and then also cover some different assets like crude oil. Might take a look at wheat real quick, but other than that, that's all I had on today's agenda. So with that, let's go ahead and go into the crude oil market. Just a beautiful delivery. So let me take off these key levels here. Weekly chart. Let's go do it like this. All right. So looking on a weekly chart of crude oil, as you guys know, I've been calling this thing higher from down here into the relative equal highs. So between the inception of the move, which is where I started calling the market higher from, to the relative equal highs, how many down weeks have we had? None. So that's the benefit of understanding drawing liquidity and where the market's drawing. And then I'm really going to take this probably into a PhD level webinar here, going into the daily chart. But just looking at that here, we're seeing that each week is continuously expanding higher. And this train is going to keep on rolling right into our premium objectives, just like we've been expecting. So looking at the weekly chart, qualified several things to you guys real time. And now let's go into what makes a high probability analysis. So looking at the monthly chart here, I'm going to go through this pretty quickly. Monthly bullish order block, traded down into its support, which is a short-term discount. So looking at the range we're trading in from high to low, we trade into a short-term premium, which is that monthly bullish order block. So now dropping into our weekly chart now, real-time, live, qualifying this consequent encroachment of this wick to send us higher, and then we indeed have rallied from there. So one thing I want to cover here is that I know a lot of these concepts may seem theoretical, however, we are using them on the right end of the chart. So these concepts, it's easy to get lost in the sauce, but you got to understand what you're looking at and not just be enamored by the high level analysis concepts that we're using and understand how these fit into the price delivery. So looking at this here, continuously gravitating higher into the relative equal highs, crushing any short sellers that are looking to sell short, and there's nothing to go short crude oil off of right now. So dropping down into our daily chart, let's go ahead and get into this. So I'm going to take you guys into a deep dive of institutional order flow. We'll go ahead and take a look at that. Perfect. So for those of you guys that were with us a couple weeks ago, you guys remember me calling it higher from this bullish breaker, trading down into it, beautifully calling the low of the week right there, expanding higher. I then took our attention to this bullish order block. So what is this bullish order block in here? This is down close candle. So remember, smart money is only able to buy when the market is dropping. So they are buying this down close candle, providing liquidity. Remember, smart money is the liquidity provider. So if smart money is providing sell side liquidity here, what are they doing? Going long. They're taking the other side of that trade. So smart money is buying here. As we trade down into it, into that opening price, let's go extend that through. What's occurring there? They're recapitalizing this liquidity that is in this order block. It's in the name, order block. It's a block of orders. So smart money is buying and offering sell side liquidity here. They are recapitalizing this specific level to re-enter or add to a long position. So now their books are net long and they're continuously adding to it. So what would we want to see here if institutions are indeed buying? A move higher. So what does this bullish order block qualify since it's traded into this one? It is a propulsion candle. So I know this may be pretty advanced and you guys may be thinking, man, how's he using this real time? I am. That's how I'm calling the market to you guys. This is all going into my analysis. So I know it's easy for a lot of people to come in here with hindsight and talk about things on the left side of the chart, but I'm able to do that because I've walked it like a dog on a leash from here all the way up to here handsomely. So now I'm just sharing with you guys what went into that analysis. And obviously you guys know I have the ability to forecast these things because obviously we wouldn't have been having our attention up here if we hadn't been so. So as I'm saying, This is a bullish propulsion block because it traded into this bullish order block in here. So what do we want to see on a propulsion candle? We don't want to see 50% violated. So price is being offered here into that opening price and into it once more. What's occurring there? More smart money buying. Why? Because the market's dropping right into a previous level of old order flow. So all PD arrays are levels where smart money has offered liquidity before. So if smart money offered liquidity here, they're recapitalizing on it here, recapitalizing on it once more. Why? Because just like your attention, the market makers are looking up here. All these longs they're accumulating in discount, they want to distribute it up here. So looking at that, we've traded down into the order block, propulsion candle, and then we expand higher with a lot of expansion. That's why it's called a propulsion block. Down close candle in here, traded down into it and finding support. So now let's go ahead and take this one level further. So here I have these fair value gaps extended through. So they become inversion. When the state of delivery is bullish and we're looking for higher prices, I want to see old inversion fair value gaps lend support. So seeing here, traded down into that order block, look at the bodies here, respecting that beautifully. Monday's trading on July 24th, traded down into that inversion, perfectly repricing the high and expanding. Why didn't we need to go any deeper into it? Because it's a balanced price range. It's already offered buy side, sell side, and then we've traded back up through it. So balanced price range, smashing higher. Looking at this fair value gap here, extending this through. We see trade above it on a closing basis here. What does this candle do? Trade to the low end, beautiful support. Bodies, trade down into it. Bodies, what are they indicating here at this down close candle and inversion? Support. So this whole time I'm reading into all these characteristics of price and I'm trusting that it's going to continuously deliver higher and higher. So seeing this here, fair value gap, reprice up into it. But what does Friday's trading do? We open, trade to the low end, expansion higher, power of 3, right into the relative equal highs. So we're going to continue expanding higher. Why? Because we have unfinished business above these highs. So institutional order flow will continue bullish. So with that, we're not done. Let's go ahead and keep moving forward with this. I also live qualified a inversion fair value gap. So let's go ahead and take these things off here. So classified that as a measuring gap and qualified this as a breakaway gap. So if this was a breakaway gap, I told you guys I wanted to see this left open. So when the market was trading here, before we even opened up for this week, I indicated to you guys, yes, we could trade down into the fair value gap, but I prefer to see it not do so. Why? Because it's a measuring gap. So I highlighted to you guys that if I'm looking for price to come up here, if this is our draw on liquidity, we want to see a measuring gap form around 50% of that implied move to confirm order flow is going to deliver there. So I measured this from here, tied to low. And then I qualified this as a measuring gap real time. Why? Because here we have a breakaway measuring gap. We do not want to see this one closed. And then we got that nice expansion higher. So seeing that all these things are coming into play, it's not just one trick pony using one concept, it's a multitude of things coming together. So the analysis needs to be multifaceted to encompass the complexity of the marketplace. So now let's take this one step further. So we use the inversion fair value gaps and extended that through. Now let's go ahead and cover the old order blocks. So let me go ahead and take off the breakaway. So old order blocks become mitigation blocks. So let's go ahead and extend these bearish order blocks through. Go ahead and make this one blue. And yeah, that's good. Perfect. So looking at these candles here, so when the algorithm is in a sell program, it's seeking discount. These are bearish order blocks. Higher, the smart money is selling short into that, offering institutional liquidity to commercials to sell or to buy, while smart money is selling short here. We retrade back up into the order block, recapitalize that liquidity, expand lower. But that's when the market is in a sell program. When the market turns into a buy program, I'm looking at these old bearish order blocks as mitigation blocks. So I'm extending these key levels through as well, and I'm measuring order flow around them. So look at the bodies beautifully respecting the low end of this mitigation block. Beautiful delivery. So I'm measuring these things real time, and then what do I want to see when we trade to the low end of this mitigation block? Expansion higher. So what's the logic? What's the narrative behind that? So if smart money was selling short in these up close candles and short up here, and the market's going higher, do they want to hold those shorts? Absolutely not. So the algorithm is going to offer smart money price within this mitigation block. Why? Now that's why it has the name mitigation block. Smart money is then able to mitigate the orders. So the market itself isn't mitigating anything. It's offering price inside of the mitigation block for smart money traders to mitigate their orders. So smart money is mitigating their short positions. Why? Because the market's going higher. So they're mitigating shorts and adding the longs. Same thing here. So smart money was selling short here. So why does the market trade into it once and twice and use it as support? Because it's offering smart money that opportunity to mitigate their short position and also recapitalize on these old liquidity levels to then send it higher. And that's why we're seeing the respect for these key levels. So all these things come into alignment to paint a beautiful tapestry that the algorithm is communicating exactly where price is going to go once you understand how to read that. So that's why I've been confidently telling you guys crude oil is going higher. And then we are nicely about to reprice into the premium objectives in here. So following that bullish order flow, down close candle supporting price beautifully into our premium objectives. So are all these things necessary to be profitable or to find setups? Absolutely not. Just wanted to share you guys the extent to how detailed this algorithm is and how much information you can procure when you understand how to read what it is it's indicating. So with that, going to go ahead and take a couple questions and probably get going here. Mark, hey Dylan, I've seen many weeks with many news drivers, but price was still gyrating up and down to new week opening gap without reaching liquidity. Does that happen more rarely? So typically the high impact, low impact news drivers will help you determine the weekly range. So understanding when's more animation likely to come into price delivery, early end of the week or the latter portion. Also understanding what days are likely to be more volatile. And that's how I'm using the economic calendar. So as you were saying, new week opening gap, if we gyrate around new week opening gap and fail to accelerate higher or lower away from it, that's indicating that the market is likely going to consolidate for the week unless we break away from that new week opening gap. So that typically happens in times of little to no high impact news drivers, but that's how I use that. Typically, when there's high impact news drivers, the market is moving. So I do not see that happen very often, my man. LN, market maker buy model, about to complete oil. Absolutely, that's exactly what I'm seeing. So seeing that beautiful delivery, sell side of the curve, buy side of the curve. So actually touching on that, with market maker models, old levels of distribution. So for the market maker model, this would be the original consolidation, smart money reversal, and then buy side of the curve. So that's what I covered here was exactly why in market maker models, old levels of accumulation here, reaccumulation, the redistribution here is occurring at those same price levels. And that's what I shared with you guys of how the market makers are recapitalizing on these old PD arrays, which are points of liquidity that the algorithm is going to offer price for these smart money entities to recapitalize on. So with that, let me go ahead and check the Telegram. Denisha, thanks for the oil breakdown. As always, appreciate it. Thank you for watching. Glad it was helpful. So yeah, that's a great question. So longer term crude oil, I am very bullish, especially going into winter, especially with things going on around the world, and even some things that I can't really even talk about on YouTube without them putting me in timeout. So looking at crude oil here on a monthly chart, I am higher time frame bullish. So that's how I'm able to trust these lower time frame sell programs. So because we're trading into this bullish order block in here, we have relative equal highs up here. So longer term, I'm looking at crude oil back up into the 120s. So now to answer your question, now that I've shared my kind of draw on liquidity or where I think the market is going, this is a partial level. Longer term, I'm holding commodities, people that I work with their investment portfolios, we are long commodities, energy and agricultural, just on a longer term basis, not short term trading, longer term 5 to 10 year perspective. So these relative equal highs are absolutely profit taking, and I will be doing that myself. Longer term though, I'm holding because I do expect us to go much higher in crude oil. So I'm looking at these equal highs here and these equal highs here in the 116s, 115s, And then ultimately all the way into the 120s is what has my interest on crude oil on a longer term basis. So that's what I'm looking at, and that's how I'm going to manage my personal positions. Okay, thank you. Yeah. So hopefully that was helpful, Denisha. Awesome. So Mr. Solomon, change in state of delivery, made easy and clear. Have to see today's session again. It's very helpful. Thank you, Dylan. Much gratitude from the community. Thank you. Much appreciated. I'm glad it's helpful. So with that, let me go ahead and check the Telegram, make sure there's no questions. Perfect. So I was asked to look at a Forex pair. USD CAD. No, okay, yeah, it was wheat I was going to look into. Awesome. So I was discussing this with my man David here in the group chat last week. So we were looking at this down close candle here and how this bullish propulsion block was traded through on a closing basis. So I sent in the group a rectangle on this premium array with sell side liquidity labeled here and here as discount. So we traded up into that discount array, which is also balanced price range, looking at the fair value gap here, extending that through, and then we rejected that lower. So Wednesday, Thursday, giving us our discount objective. So one thing that I did want to cover here, taking off the adjusted, looking at this consequent encroachment. So if selling short from up here, this is profit taking. So consequent encroachment of a wick, we do want to look to scale out of our position if going short, because one thing that's really important to recognize is that a lot of times the market will stop just short of a swing lower, swing high, and it's always the consequent encroachment of the wicks is where it stops. So that's why I personally have it as a rule that whenever I'm going short, 50% of a wick, I'm taking a partial, because every single time that the market has traded just shy of a swing high or swing low, it's always been this scenario right here, where we reprice right into consequent encroachment. I hold out because I'm thinking we're going to get that liquidity, and then it reverses higher and I didn't scale off any profit. So what I do like to do is scale off at consequent encroachment, and we did have a nice move from this fair value gap down into the liquidity below this rejection block. So going to be expecting continuous expansion lower into the sell side here. Acceleration through that takes us into this inefficiency, and then this sell side here. So commodities, got them in the bag, walking them on a tight leash as well, not limited to Forex and index futures. So with that, let me go ahead and take a look at the chat. I think we're going to go ahead and wrap it up here. Sal, my man, what's going on, brother? Let's go ahead and take a look at NEO and IO. So looking at NEO, personally, we are still higher time frame bullish based off this weekly chart. And I remember calling this higher after we saw the 3 drives on the weekly chart. We violated a swing high after purging the liquidity. So we have that shift in market structure. Down close candle support, and we've been trading higher. I remember these relative equal highs we were looking at, and then we've expanded higher. So I remember I still have this from our last session, Sal, looking at the premium fair value gap in here. And we are continuously expanding higher to that. So what I will be looking for NEO, last line in the sand for bullishness for me would be this breaker. So it is a pretty big range, but I would prefer to see us stay above this breaker and fair value gap if we are to rally higher. And then my next premium objective would be this fair value gap in here. So let's refine this further on the daily chart. So now this is our breaker. And I remember, so yeah, we had this breaker on from our chart before. So I remember sharing that if we were to be bullish, we would like to see support in this breaker and fair value gap. So we've seen that beautifully, expanding higher through the relative equal highs. So I'm still seeing order flow as bullish. Spotty charts like this are a little more difficult to read, but underlying order flow is bullish. Down close candles are supporting price all the way through this bullish delivery. So I would want to see that continue. Because this isn't that clear to read, we have a down close candle here and here. If we trade through this down close candle, that's not very bullish because we also have a fair value gap in here that I would want to see support. So I would rather see the price supported in here to send us higher into the premium inefficiency. Failure to accelerate higher from these discount arrays sends us lower into all these inefficiencies here that we've seen on the upside delivery. So some things to watch out for. But as a stock trader, NEO, Tesla, for example, any stock you're trading, whether it's Apple, Microsoft, you do want to pay attention to the indices. So if indices are overall bullish, it's going to be easier for stocks to rally. So the way I like to think of it is all boats rise in high tide and all boats come down in low tide. So yes, a stock could be more or less bullish and outperform the indices themselves. However, as a general rule of thumb, if indices are bearish, that does not likely bode well for individual stocks as well. Not saying they can't rally, it's going to be much more difficult as the stock is essentially going to be swimming against the tide of real institutional order flow. So if institutional order flow is flowing into risk off, meaning it's leaving indexes going in the dollar, that's going to be much harder to see buy programs and buy models in stocks play out. So that's what I'm looking at moving forward for that, Sal. Hopefully that covers your question, my man. Denisha, great session. Don't forget to give the stream a like. Absolutely. Much appreciate the support. And then if you guys could give us a like on your way out, comment on what you thought. That greatly helps us out here. So much appreciated. Nia, what commodity do you use SMT for oil? So I look at UK oil. So that looks like this. UK oil. So this is Brent crude. So I'll look at Brent crude as a SMT for a correlated asset with crude oil. Rafa, what's up, bro? Thanks in advance. Do you see breaker on NQ like the hourly chart? So yeah, let me go ahead and finish up here on NASDAQ. And then go ahead and bid everyone a farewell. So looking at the weekly chart here, same thing as we were seeing on SPOOs. So looking at wick, consequent encroachment, extending that through, look at how we were unable to really mount any meaningful rally above consequent encroachment, which indicates what? Weakness. So really, you can look at my analysis for S&P and apply it to NASDAQ, as it's pretty much the same thing. So seeing how we're weak, we reprice the fair value gap and into the propulsion candle. So still seeing that same thing. Order flow is bearish on NASDAQ, as we saw that SMT rejecting this balanced price range here, as I had covered. So unable to rally above that, indicating weakness. And then acceleration lower. Fair value gap, called this out real time, saying how I wanted to see us drop from there. And it delivers like gangbusters into previous day's low and into this inefficiency. So I would expect that to continue moving forward. We have this inefficiency and clean lows in here. However, if we fail to accelerate through that, then we're at a point that's 50-50 because order flow is bearish. We're pretty much at equilibrium here. So unless we start accelerating and displacing into one direction or another, I will be 50-50 for the indices. So dropping down into the hourly chart to get to your question. So am I seeing the breaker? Yeah, so it's basically, as I said, same thing I covered in S&P. We looked at this breaker in here, and that's my point of interest, to see short selling come into the market and displacement lower. So seeing that same thing on NASDAQ, seeing how they perfectly engineered relative equal lows, seeing a retracement into this fair value gap and breaker is what I'll be monitoring, and then how we trade there will be influential moving forward. So that's what I'll be monitoring on NASDAQ moving forward. And then I covered my discount objectives, what I was looking for. So acceleration from this fair value gap lower sends us into these equal lows. So on a 4-hour chart, same thing I'm seeing on SPOOs, I'm seeing that same thing on NASDAQ. Let's go make this full screen. So original consolidation, smart money reversal, NASDAQ making the SMT, and then I would prefer to see acceleration down into these relative equal lows. Because looking at the entire yearly order flow, we've been bullish. So where our stop loss is going to be trailed on a fund level, well, there's one level, smashed into that, called it beautifully, and then we have these relative equal lows. So as long as we remain in the sell program and order flow remains bearish, I will look for these relative equal lows on NASDAQ to be taken out. So with that, hopefully that covers your question there, Rafa. So appreciate everyone joining us here. As Denisha said, much appreciated. Be sure to leave the stream a like on your way out. That greatly helps us here. And with that, I bid you guys farewell, and we'll speak next Sunday. Hope you guys have a great trading week. Good luck and good trading. Take care.